Cost Accounting for Managed Care, presented by Dopkins System Consultants. A couple of housekeeping things for anyone who wants CPE credit. I'll pass around a sign sheet. Please make sure you sign it, and also the evaluation forms are in the center table. You have to fill out an evaluation to get the credit. Okay? I'd like to introduce, and I didn't put my glasses on, but I'm going to try this. Huefner and Jonathan Willcox. Thank you.
Thank you everyone for coming. Appreciate everyone making it out so early in the morning. So hopefully the session you're here for today is Cost Accounting for Managed Care. As mentioned, I'm Matt Huefner, this is Jonathan Willcox, and we're with Dopkins System Consultants. So some of you may be aware of who Dopkins is. I know a handful of you in this room. For those who don't, we're a public accounting firm in Buffalo, a team of accountants and consultants. And what we're hoping to get across today is that there's several different aspects that go into effective cost accounting. It's not just enough to properly record your costs into your system or into whatever you're using to track them, but you also need to be able to effectively report out on what you have put in. And for that reason, I think John and I are maybe uniquely qualified to talk about this because of our backgrounds. As I mentioned, we're both in the system consulting practice, so we do a lot of work with ERP system implementation, business intelligence, reporting tools, things of that nature. But we also both have an accounting background. So I got my degree in accounting, and I think that experience has kind of helped me bridge the gap between accounting and technology as I've moved through my career. John actually started out the same way. He worked in our assurance services department for, I think, 6 years, and recently, last summer, moved up to our system consulting team. So I think for that reason, we both have a fair amount of experience in both areas, and I think that's proven to give us some helpful experiences in this area. So some of you who have been to this conference in previous years, roughly 2 years ago, we introduced the concept of MC squared. The idea being that in order to effectively prepare for managed care, the first thing and most important thing you have to do is effectively manage your costs. Obviously, as all of you are aware, the environment is changing a great deal. Gone are the days, or at least being spaced out, when you could just get a fee for whatever services you provided. With the state moving to a managed care model, the onus is now on you as financial professionals in your agency to effectively manage your costs in order to benefit your agency both financially and in such a way that the outcomes for the individuals you serve are not affected. So that's where we're focusing today. We developed this continuum, and there's basically 4 quadrants to effectively transitioning towards managed care in this environment. So we'll be talking about the first quadrant today, which is identifying and managing your costs. After you do that, you then use what you've learned there to optimize performance in your agency. Then that potentially leads to organizational changes. And then the cycle ends with monitoring and following up. And in some cases, this is not a beginning to end sort of thing. This is something that you can go back and revisit and go through the continuum over and over again for different parts of your agency. So again, this morning we'll be talking about the first quadrant, identifying and managing costs. Immediately after this session, not in this room, in one of the other rooms, Sarah Claire and Ralph Jeswald, who are up in the hallway, both partners at our firm, will be focusing more on quadrant 3, the organizational changes aspect, with their presentation on person-centered collaboration. But what we hope to do today, and some of you in your agencies may be at different points in this process, what we hope to do today is kind of give you an effective starting point on how to identify and manage your costs. So, first to clarify what we're talking about when we say cost accounting. The most generic definition of this is the recording of all costs incurred in a business in a way that can be used to improve its management, which is a nice high-level description and something that you would learn in school. But there's a lot more to it if you want to do it effectively and manage it effectively in your organization. It's not simply a matter of recording the costs, but then what happens with those costs? How do we effectively get information once we've recorded it in the right place? Our argument is that reporting is just as, if not more important than the recording of the costs. How do we use that information to make effective decisions? The other challenge here, and we'll be touching on this a little bit later, is that in a lot of cases, the people doing the recording of the costs, the finance team, is different than the people who are actually responsible for managing what happens with those costs. The management of that is, in a lot of cases, the operational people, the program directors, the people in your organization who are actually out at the IRAs and out at the ACAP sites. So that's one of the challenges too, and how do we bridge that gap between the accounting end and the people out in the field? So I'll give you a roadmap to do that today. So for the purposes of this conversation, what we're saying is cost accounting is not a set of rules to be followed verbatim. You know, a lot of other areas of accounting, there's very strict guidelines, rules you have to follow, and that certainly does apply. But what we're saying here is what you do with that information you have is just as, if not more important. It's a structure for a series of decisions on what to do next, and every case and every one of your organizations is likely different. So you need to have that experience, that background in the things that your agencies do best. One of the interesting things I always think of when I think of this is that when I took a cost accounting class in college, it was the only accounting class I had that did not use a textbook. Pretty much the entire scope of the class was working in teams, getting a case study and saying, okay, how are we going to work together, people from different backgrounds, you know, going through analyzing what the problem was, developing solutions to those problems based on the facts we had and the things we knew about our organization in that case. So that's always kind of what I go back to when I think about this. So in a lot of ways, this represents a dramatic change for most of you in this room, the individuals working in finance. In the past, finance team was basically an administrative function. So the buck stopped with you. All financial reporting went through you. You were basically the gatekeeper to that information. Well, we're saying that in the cost accounting world, the idea is that you're going to be a support function instead of an admin function. That the people who need to utilize this information are, again, the people that work at the programs, the people that work at the sites. And they're going to be relying on you in a large part to give them the information they need to make effective decisions about the things they do on a day-to-day basis. And that's really a pretty dramatic shift for the finance team's role. You know, an analogy that kind of came to us when we thought about this is if you're in a relationship and one person in the relationship primarily does the finances and another person does all the cooking and the shopping, the person who does the cooking is going to need to know what ingredients you need, basically what tools they're going to need to effectively prepare the meals. The finance person might be able to provide them with additional information on, you know, what things are on sale, what do we have room for in the budget, you know, what's the cost benefit of eating out 5 times a week versus 3 times a week. So I think that analogy kind of goes to what we're looking at doing here. So this is kind of a commentary, I guess. We're not totally discounting the role of intuition. Obviously, there's a lot of people in your organization that have a lot of experience, and they know what needs to happen for their piece of the pie to run effectively. Our argument is that there's a lot more that can be done if you have the data to back that up. Again, it's a pretty dramatic shift. Previously, the reporting cycle, the things that you guys needed to be thinking about, were pretty much all statutory requirements in this area. So, when do you really think about costs? Every year when you prepare the CFR. Every year when it's time to do the budget. On an annual basis or on a quarterly basis when it's time to prepare reports for the board. Those would have been the times when you would have thought about your costs in the past. What we're arguing here is that it needs to happen more frequently. The cycle is going to change. It's not necessarily just a revenue cycle now. It's an information cycle. So, and that, again, is going to depend on who's consuming the information. If you have people working at your program sites, and it's a day-have site, and I need to know information every day, whether it's dollars or whether it's some other information, something to the effect of who can I schedule today to fill a shift. That's really a daily information cycle. So the idea is that the data is going to be important towards answering all those questions. And it's not going to be enough in this changing landscape to just rely on intuition. You can have all the experience in the world, but what happens when I have someone leave the organization? What happens if I have to deal with some consolidation of programs, something I haven't dealt with before? You're going to need some sort of data to back that up and help inform you making your decisions. So again, the goal, don't wait until it's time to prepare the CFR to start analyzing your costs. Obviously, the CFR is still a very important part of what you do. But for the purposes of effectively transitioning towards a managed care environment, it's going to be too late to make any effective decisions. Because by the time you compile all that information, the time has passed. It's not relevant anymore. So you really need to start thinking like a for-profit business. They've been doing this since the dawn of time. And that's not to say we're discounting that not-for-profit agencies are different in any way. Obviously, there's a lot of different considerations that come into play. But if you think like a for-profit business, their main goal is the same as yours. It's to accomplish whatever their end goal is at the lowest possible cost. Now, their goal is a lot more revenue-driven, perhaps, than yours. A lot of you may say the mission is the most important goal, serving the people that we serve. But if you start thinking about these things, the hope is that you can use this as a preventative planning measure, not just looking at the CFR as a snapshot of what happened in the past, but going forward and moving ahead and looking towards the future. Okay? So, going back to that spectrum, so as we said, the first box in this continuum is identifying and managing our costs. So the first challenge then is identifying the costs. So that's an important piece of it, because if we don't know what things are, if we have to do a lot of digging back to source documentation to figure out what this particular expense was for, that's a lot of wasted time that could be better spent doing value-added things in our organization. So these first 2 points here, how do we capture the costs and where do they live? So mainly these speak to, is there a lot of duplicate entry going on in your accounting system? Do things live in different places? So if I'm looking for data and I'm the controller and I want to run a report on my general ledger, do I have all the data I need there to effectively form that report, or do I need to go to other different sources? Do I need to look at the payroll system? Do I need to look at the billing system? how we capture the cost has a lot to do with that. If we have, again, kind of looking at some of the different things, if you take the payroll example, payroll starts as a timesheet that may be entered into the electronic system or may be recorded manually. That eventually works its way to payroll, which eventually will work its way to the general ledger system. How much of that information is actually passing through to all three systems? Can we look at one slice of that and effectively get the answer to what we're looking for? Or do we need to cobble together information from multiple sources to find the answer that we need? Ideally, we want to identify our costs in as detailed a manner as possible. So this is important. So again, the example I just touched on, you can have all the detailed information in the world in your payroll system, let's say. If you're passing that data to your general ledger as one line item that says salaries, and the general ledger person does not have access to the payroll system, then that doesn't really do them any good. It's just going to be a lump dollar amount in the salaries account, and to get any information that I need, I got to go hunt down the payroll person to find out what I'm looking for. Now that's not necessarily to say that you need to create hundreds and thousands of general ledger accounts to accomplish that, but something to think about in that in some form or fashion, our costs should be identified in as detailed a manner as possible. One of the other points here, units versus rates versus dollars. So this is going to be important when we look at analyzing our costs later on. So if we look at a particular expense, and let's say that expense is trending up over time, and we want to take a little bit deeper look and find out why. It's not necessarily just enough to look at the dollar piece, because there may be multiple different factors that go into that, and they may be trending in different directions at different times. A good example of this may be transportation. So if you have a transportation account in your system, and we see that that expense is going up over time, what is the potential cause of that? Well, first question would be, is that transportation account a bunch of different factors lumped together? Is that, if we have a vehicle fleet, is that gas? Is that maintenance? Is that repairs? All those things really are different factors and should be tracked independently, and that goes back to the last point of having it as detailed as possible. But just looking at gas as an example, obviously the unit in that case would be our unit of cost, which is gallons of gasoline. Some of those things we can control, some we can't. We can't control the rate at which gas costs. That's something out of our control. But we can potentially look at the units that have changed over time and see why that is. Do we have inefficient routes happening with our vehicle fleet? So certain things to kind of keep an eye on. The other big point here is whenever possible, you should use actual costs as opposed to estimates. Now I know this is never going to be possible in 100% of cases. There's always going to be things that you're going to have to allocate, overhead for instance. But when we look at, in terms of the people who are actually going to be using this data to make decisions, if they have actual costs in front of them, that's going to be a lot more helpful to them to be able to decide what to do with that information. If you were to show a program manager their departmental P&L, and you see all their expenses, and 90% of them are things that got allocated and they don't know how or why that is, chances are they're not going to have a lot of input into how they can actually facilitate and help be more efficient. So for that reason, whenever possible, we're suggesting that you try to record actual costs as they're incurred. Common example of that, again, is timesheets. And a lot of this goes into how your people in the field are actually recording timesheets. If they're using paper timesheets and just writing out what they do on a day-to-day basis, what shifts they work, maybe it's just recording 8 hours of time and it's being used to determine what they get paid. That's not going to do a lot of good in determining what programs, what sites they worked at. You know, in our firm, we do detailed timesheets on a daily basis. So throughout the day, we record, you know, which client we're working with, what it is that we did. And a lot of that is facilitated by having an electronic system available to do that. But that allows us to get detailed information at the end of a week or month on what exactly we did, who we were working with, what the actual costs were to work with each client. And the same is potentially true in this environment. So, what are some of the things that are going to potentially change? Important thing to note about a lot of these things is that most of this is going to require you to do something that you may not have in place right now, and that you may not have done before. We touched on this a little bit before, timely reporting. So again, in the past, timeliness just meant getting my CFR filed on time, getting my budgets done on time. Timely reporting is really, in this case, in the eye of the consumer. So if this is a report for the day have sites, then timeliness may be every day. It might be once a week. It might be once a month. You know, and a lot of this is going to be different reporting than what you're used to in the past. If someone in operations wants to know who do I have available to fill a shift today, someone called in sick, let's say someone at one of my residences. Someone called in sick and I need to know who I can fill a shift with today without incurring overtime, because overtime is an additional cost that we want to avoid if possible. That obviously is a daily need, something that you may not have right now available to you. And that kind of touches on the next point as well. That report I just mentioned, that doesn't really have anything to do with dollars at all. So some of this reporting may be units-based reporting, not dollars reporting. So not something that you would get out of your general ledger, but if we had a report that we could run, if we had a scheduling system and could see, give the program directors the ability to look at their schedules for a given week or month and see who was available, who had worked X number of hours during the week, and see who we could get to fill that shift without incurring overtime. That's going to be helpful towards cutting down costs in that area. We touched on this a little bit before, but reconfiguring your chart of accounts might be an option. I'm not saying this is the be-all, end-all. Obviously, a lot of you don't want hundreds of new accounts showing up in your general ledger, but in certain cases it may be effective. In the transportation example I gave before, if you just have one account for transportation, maybe it's worth splitting that into gasoline, mileage, maintenance and repairs. And that way we can look at each of those individual aspects and see how they're trending over time. Electronic timesheets may be an option as well. So, you know, some of the things that I've experienced in the past is organizations saying, you know, I'd really like to be able to record a lot of this information up front. I want my people that are working at my various sites to be able to charge their time directly. But they're filling out their timesheets on paper, and that's just going to be too much overhead because someone then needs to take those timesheets and key those in to our payroll system after the fact. So that may be a hindrance there. So in certain cases, you know, taking things that were manual processes and making them electronic may be helpful towards facilitating this. Another example might be a job costing system. So job costing systems were developed for manufacturing, but in some cases what we're seeing, especially with the rise in self-directed services, that a job costing system is really the concept that we're looking at. We have a job which is providing services for this individual for this budget year, and these are all the services we're going to provide. So in a manufacturing or a construction environment, you might say building a house would be the job, and I need to have someone come out and do the roof, I need someone to build the frame, I need someone to do the plumbing. Those are all aspects towards completing that job. In this example, what we're saying is really serving an individual who's self-directed is no different. You know, I need to provide a series of different services for them, all of which are budgeted ahead of time. And can't I use a system to track that without necessarily going back and creating a whole slew of new GL accounts to do that? So those are just some of the things we're looking at here, some of the things that we've seen, things that people in the finance area can potentially provide to people that work in the programs to facilitate this and give them some sort of ownership over it. Probably the biggest key, though, is focusing on your controllable costs versus what's not controllable. One of the biggest pushbacks that we've seen at agencies who have started going through this process is when you start talking to the operations people about this. Again, the example I used before, they're used to seeing a statement of how their program did over the last year. And a lot of those costs are things that they have no idea where they came from because they're not financial people. And they have no idea why things were allocated to them the way they were. What some agencies have found effective is, obviously, yes, you're still going to have a budget, a total budget for all expenses for every program. But for the purposes of this conversation, maybe it's worth only showing them a subset of that. Only show them the pieces that they have control over and take it a little bit deeper dive, and John's going to be talking about this in a bit. But I think that's going to be more effective than just showing them the whole scope of everything. In some cases that gets a little complicated. So again, this touches on our earlier point. So if you look at something like salaries, obviously we can't not pay our people, our direct care workers, our clinical workers. But certain aspects of salaries are controllable. Overtime is controllable. So the example I touched on before, if you're having a lot of people working overtime and incurring a lot of overtime, is that because it's just a scheduling issue? Do you have capacity with other employees that you could be using to fill shifts, and instead you have people working overtime? That's incurring an additional cost for your organization. That is potentially something you can control. Supplies is another example. Again, real life scenario. What we found is we had an organization that had supplies all booked as one expense account. And after some analysis, what the programs were finding is, okay, we agree that we can control certain supplies, office supplies, let's say. Obviously, we can control through centralized purchasing or whatever the case may be, what people are ordering. But then we have medical supplies, and that's really completely out of our control. Those are things that are prescribed by a physician. They're things that obviously are necessary to the care of the individual. We don't have any control over that. We don't necessarily know when those things are coming. So in this particular case, they actually split out medical supplies into a separate expense account. And that gave them some visibility in terms of which and how each of those things was trending. And again, transportation I kind of touched on before. But using the self-directed example, there's a lot more cases now of, rather than having residential sites, we have people that are that we're serving that are self-directed, living out in the community. But in some cases, we're still providing housing for them. So we're, renovating apartment buildings and using that for housing that we're providing at a low cost to self-directed individuals that we serve. So if previously we were transporting them back and forth between day hab and residential on a daily basis, we do have some control now over transportation, because if we're in that sort of mindset, we could potentially build that housing near the day hab sites. Obviously there's other challenges that go along with that, but that's just meant to be an example of how potentially that could work. So I guess the overriding theme here is that there's more nuance in each of these areas than potentially you're looking at today. So some things that you can start thinking of. And so really what we're trying to do, again, just to recap this piece, is to identify costs with as much information as you can at the front end of the process. And that's going to facilitate decision making at the back end. Ultimately, what we want to do is empower the people that are going to be making decisions. The people that work in the programs, the people that work in operations. Obviously, all these new things we're talking about, it's easy to look at them as potentially a burden on you guys. Wow, there's a lot of information now that I need to manage. I'm going to have people coming to me asking for reports. The goal, I think, is to try to empower those people to get the data they need when they need it without having to come to you and burden you guys with that additional information. And some of those tools we talked about could potentially do that. All right, so I'm going to hand it over to John at this point, maybe go through a couple examples of how that works in a real-life scenario.
Good morning. So to recap quickly what Matt talked about, we described what cost accounting is for purposes of this discussion. We're not focusing on the CFR aspect of reporting your costs, more managerial cost accounting. And Matt touched on the fact that in this role, finance will be in more of a support role to give the data, to give the information to the decision makers. He touched on some ways that you might want to identify those costs and capture those costs. And now what I'm going to do is I'm going to try going through and giving you a roadmap of how you might take everything that Matt's talked about and what are some implementation steps that you might be able to take at your organizations. Before I jump into my part, I just want to check, does anyone have any questions about anything that Matt's talked about that we can address before we get too far? Okay, dive right in. So this is a high-level implementation guide here on this slide. The very first step, if you want to go ahead and take this approach, is pick a program. Pick an area, pick a cost center that you're going to start with. Matt touched on the fact that our MC squared model is 4 quadrants. It's kind of maybe more like a circle. It's a continuous process. Once you start one and you finish it, you might pick up another one. So you're picking one area to start with. You're not taking the whole entity. You're not taking the whole organization at once. You're going to have an initial meeting. This meeting isn't a kickoff meeting for the whole project. This is going to be specific to the program that you selected. And I'm going to go into more detail on these in a little bit. After you have that meeting, you're going to implement what came out, the ideas from the discussions. And just like our MC squared model, the 4th quadrant is monitor and review. The same is true in this process. It's going to be a continuous process. So you're going to continuously monitor, review, update as your organizations change. The example that Matt gave of an organization that identified supplies as a controllable expense, monitored and realized, well, you know what, really, we need to break that down in more detail between medical supplies and other supplies. It's an example of the continuous monitoring and reviewing of this process. And then at the end, rinse and repeat. Pick a different program and start all over again. So I'm going to go into a little more detail about these steps now. Select the program. Just do it. So just pick an area and start. Whether it be, so I'm going to use program in this discussion. It could be a cost center, it could be a department, a location, however your organization might choose to describe it. But pick one of those areas, pick a way to segment your business, and in this case I'm calling it a program, and start somewhere. We're striving here for progress and not perfection. There might be, as we've talked about, there's a changing landscape, and you might think it's a few years down the line, so we can kind of push that off and wait. Regardless of what the ending regulations and ending rules are, I think we can agree that things are changing. And to start this process, which might take some time, it'd be better to start now rather than get caught off guard when things actually go in and are implemented. To start this process, just do it. Just pick an area and start. So at this kickoff meeting, we picked an area. We picked a program. Who should be at this meeting? Matt in the beginning talked about the idea that finance is a support function in this role, and that you're enabling the decision makers, people in operations, to make the decisions. So this is a collaborative effort. So you're going to need the people from the program that you selected, the program director, any applicable people that they think should come with them, as well as the finance team. Some people, when you're thinking about what we're talking here, cost accounting, you might think this is strictly a finance role. But one of the points we're trying to get across is this is more collaborative than just finance. It's going to be bridging that gap between the people that typically have the information of the costs and the recording of the costs, the finance department, and the people that typically use that information to make decisions in operations. So we want both parties together. And then to kick it all off, what I'd recommend is explain to everyone why we're doing this, why it's important. This gives people a sense of purpose. It helps them buy in. I'm sure all of you have been in an organization where you have an initiative, and unless there's good buy-in from that initiative, it's kind of fizzled out. So you need people to buy in and think that it's an important reason of why they're doing it. So explain this to them. Explain to them the changing landscape and funding. Explain that now, with managing costs, this could potentially mean the difference between keeping the doors open and closing down. Organizations may go out of business from some of these changes in funding. And to prevent your organization from being one of them, there's going to need to be some changes. And one of these changes is in effectively managing your costs while still providing the same level of quality care to your individuals. So let people know this to help get the buy-in. And also, it's a little bit of a different feel at your organizations. Matt mentioned some of these concepts, think like a for-profit. So for-profit manufacturing companies, they do this all the time. But one of the differences is that in a for-profit, if you were to go to employees and explain this concept that we're trying to manage costs, you might get some eye rolls, and people might say, well, yeah, that's just because the money's in some CEO's pocket, and why do I care? That's not the case with your organizations. And let your people know that. Let them know the importance of this means keeping the doors open, providing quality care to individuals, maybe being able to provide more care to more individuals than you currently are. If you can eliminate some maybe non-value add costs and funnel those costs towards more value add activities. So after you've done that, define the scope. Let people know what you're here to talk about. You might think this is intuitive if you've got a certain group in, a certain program together, but it never hurts to over-communicate. Define what the boundaries are of what you're discussing, and make sure everyone's on the same page before you dive in and get into these discussions. So once you dive in, as a finance team, we'll be facilitating this meeting. Your role is going to be to ask questions. And then when you're done asking questions, ask some more questions. Your information gathering. You're trying to get information from the operations teams as far as what information they need to make the decisions. I'm going to give some examples about these questions in a little bit. And then the last thing I want to point out about this meeting is to have an open mind. So as you're talking, someone might come up with an idea. And rather than shooting them down, if your current technology doesn't allow it, maybe your current system or process doesn't allow it, maybe someone says we should track certain expenses in our GL a different way, and you don't currently do that. Rather than shooting that down at the meeting, try and keep an open mind. This is a brainstorming session. So in brainstorming sessions, you don't want to put a kink in that hose of ideas coming out. So just let them all come out, gather them. We'll deal with the implementation later. but foster an environment where people feel comfortable sharing their ideas. So I mentioned that one of the things you want to do is ask questions. So this is, an example of 5 higher level questions that you might want to ask in this meeting. First thing is, we're here to manage costs. So ask people, what are your costs? What costs money to provide the services that you perform? As you ask people this, again, these are higher level questions. When I said ask questions and ask more questions, some more detailed ways, you might need to pull the information out of people to get their minds thinking. So maybe a way to do is you go in with a P&L, an income statement for their program, and maybe start providing and say, well, I have in here, salaries is one of your costs. Let's talk about that. What are these costs? The next question in that might be, what are the drivers of the costs? What we're trying to get at is figuring out how can we help these people make decisions. So when you start asking them, what are the drivers? We've identified salary, so drivers might be hours, rates, the number of people we have on hand, as far as if we're not staffed adequately, we have more overtime. So that gets back to the detailed level of the questions for costs. If you break down your costs by saying salaries, you might get a certain set of discussions, questions, ideas about it. But if instead you said, let's look at overtime expense. Let's look at night shifts. Let's look at second shifts. Let's look at weekends. And break it down to as much detail as necessary to get the right information flow, get the right discussions going amongst your team. So you've identified the costs and you know what the drivers are. Now you want to know which ones can be controlled and can't be controlled. Matt touched on this, where if you're asking people to help manage these costs, they might get a little put off if you're asking them things that they can't control. So they'll probably be more than willing to give this information because they don't want to be held accountable for something they can't control. So they're going to know. If you ask them what are the drivers, the expenses, and what can you control and can't control, they're going to know. So ask them these questions. And this first set of questions is more information gathering. And these second 2 questions start turning the corner around gathering that information into how you're going to turn that into action. So after you know what drivers they can control, you start asking what information do they need to be able to control them. And this is where you start getting some good insights into the implementation steps. You're also going to ask them how often they need it. It's as if you're designing, coming with a design doc for the roadmap of the next steps of what your team is going to be implementing. So these are some of the higher level questions. This is an outline, if you will, of how you might go through the meeting. The ask questions and ask some more questions could be shown here. So here's some examples of more detailed questions you might ask. When you're asking about what are your costs, what are your drivers, maybe you break it down and say, what costs are expected versus which are unexpected. So if we're sticking with salaries as an example, somebody might say, well, there's a certain component that we can expect, but overtime, I can't expect overtime. People get sick, people leave the organization, who's have to fill in. And if you dive into that, you can say, well, why can't we expect that? Let's try and find a way that we can minimize that. And maybe through discussions, what you find is that you're operating very lean, and you've got 4 people in a program, all working 40 hours a week, and it's high turnover. So you frequently have someone turn over, and you have no excess capacity to fill that extra need. So then you run into a situation where other people have to step in and take on overtime. So what if you start asking yourself, well, what if we had 5 people or 6 people, and what if we had some people working 30 hours a week? So knowing that we have high turnover, if somebody leaves, we have some people with excess capacity that we can shift some of that responsibility to. So these are different questions. This is a more detailed look than just asking somebody, how do we cut salaries? How do we manage wages? You ask that question, the responses you get might vary versus drilling down to more detailed level questions. Another way you might ask it are, what cost factors differ at different times of the year? Maybe there's some seasonality. Maybe there's some peak times where costs vary. An example where you might find this is if you run a school and some of the expenses related to that, maybe some salaries or supplies. In the fall and spring, when most of the people are in school, the expenses are going to be higher than in the summer. So if you came up with a budget for the program, and you took the expenses and just divided it by 12 months and had a monthly budget, and you're asking people, why are you over budget during the spring or the fall? They're going to start rolling their eyes, saying, that's not meaningful. I can't, this doesn't mean anything because, I don't know where this budget came from. Versus being more specific and asking them these questions of where are your peak times and non-peak times. So you can give them information that makes sense to them. So that way they feel that there's some sense of legitimacy to the information that you're asking them for. So after you have this meeting, you've asked some good questions, you've got a lot of good information, and I told you one of the keys is to have an open mind. Don't worry about how we're going to implement it. Well, now is when you have to worry about how to implement it. So invariably, you'll run across some challenges. Here's a few questions that might pop up as you go to the implementation phase. The first one being very important. Who's responsible? We talked about this being a collaborative effort between finance and operations. So you've got all these ideas. Who executes them? Is it someone in operations or is it someone in finance? What you might find is that it's a very specialized set of skills to do this work. You need to have an understanding of the costs and the finance. You need to be able to work with and understand what's happening on the operations side. You also need to have a bit of understanding of how to manage and work with data. As we go through some of these other questions, what you might find out is to create some new reports. So you have to be good with analyzing data and getting the reports in such a way that you can give it to decision makers. So it's not a one-size-fits-all. You might not have someone in an organization that already has a skill set. Maybe it's to give someone some more training. Maybe it's to bring on someone. The role that this closely is familiar with is something of a business analyst role in an organization. Some of you may or may not already have a role of a business analyst. That's the type of skill set, that's the type of person that would probably fit this role. Yeah.
You present this as speaking, so say you have 5 divisions or 5 different service groups in your organization, and you present it, go to one first and then work your way to the next. Might there not be benefit to talking to everybody at the beginning? Because you don't want to create 5 different systems that are totally different from each other, because that just becomes cumbersome and not necessarily practical. So wouldn't it maybe make sense, there'd be a logic to getting a feel overall first, and then working with department by department, so you can at least have a feel and maybe create something that works equally well or can be modified in some way for each individual needs, rather than 5 maybe different.
Yeah, I think that's a good idea, and I think the key is one of the things that you mentioned was still having those individual meetings with the individual programs, so you can focus. If you're asking, depending on your organizations, the different locations, the different programs, some of the needs of one area might not be applicable to someone else. So I do think there would be value in getting a group-wide kickoff meeting with maybe the heads of the programs, each program director, and the finance team to all get on the same page. But I do think it is still important to have those individualized meetings as well. So another challenge you might face is someone might have an idea, and maybe some of you go back and you have these meetings and you heard Matt talk about units. Maybe you need to capture units, not units of service, but units of cost. So someone might say, okay, let's capture units of cost, but how do we do this? Our accounting system doesn't allow us to do this. So someone's idea might be, let's put hours worked, let's put that in our general ledger. There should be a field in the general ledger to put units, but maybe your accounting system doesn't have that. So you might use a bob and weave. So maybe rather than taking the one idea of saying we need to put units as a field in our general ledger, Maybe instead, what you need to do is figure out how can you get the unit data that lives in the payroll system and merge that with data that you might have in your general ledger system. So it might not be a one-size-fits-all, and as these questions come up, your original idea might need to morph. You might need to change the way you get to that kind of goal. The next question, what if your systems don't talk to each other? So if you have the data in a payroll system and a general ledger and time entry, and you can't get them to talk to each other, that could be an issue. So that might result in a different set of skills. Maybe it doesn't currently, but maybe it can. So maybe you need to explore how can we get information from one system to another system. How do we query the data from both systems and put it together? And the last one might be one that you might be worried about is how do you meet these timing needs of these decision makers? So it might sound like a whole lot of extra work if before you're producing a monthly set of information to the program directors, and now you have these meetings and people are all excited and they go, yeah, I can make better decisions if I get this information every day, every week, every hour. And you're like, well, wait a second, now my full-time job is going to be creating reports for all these people. So how do you accomplish that? How do you accomplish if someone comes and asks you for information and you're in the middle of something, so you can't just drop it and give it to them? One of the ways is, as Matt mentioned, empower these people to get the information themselves. So maybe you change your system and process to centralize the data in a location that they have access to, so they can run the report themselves rather than having to come to you to run the report. Maybe you automate a report to kick off automatically. Every day, every week, every month, it goes to specific individuals. And perhaps you set some automatic triggers or alerts in your system. So if somebody says, there's a specific bit of information that I need, and I really need to know when I'm within 5 or 10% of my budget. Well, rather than you spending all your time monitoring this every day, every week, you could set up in your system an alert. If it hits this trigger, an email, an alert goes out to the appropriate parties. So these are ways that you can automate these processes, so it's not necessarily just an ongoing full-time job for the finance team to support and give this information. There'll be some upfront costs to create these and create this automation, but then a lot of it will take care of itself. So one of the things that we can do at Dopkins is we've helped organizations go through this process. So this concept of having a kickoff meeting, getting ideas from program directors and finance, the finance team, we can help with that meeting. We can help facilitate that meeting. What we found is after going through one of these, an organization has a feel of how that works. So we can maybe help out with the first one and step aside, and your team can take it from that point on. What you might also have questions with, going back a slide to the challenges facing implementation. Maybe you did a good job keeping an open mind and took down all these ideas, but you're having some real trouble getting data to talk to each other. And maybe a phone call to us, we can help you think through another way to do it, or help you do it. In sports, I don't know if there's any sports fans, there's people say about athletes, the best ability is availability. If the player's not in the field, they're not any good for you. Same thing's true in your organization. You might have people with skill sets to perform all this work, but we know timelines are crunched and budgets are tight, so maybe you don't have the time to do it. So if you don't have the people that have the availability to do it, maybe we can come in and help you get through that. Does anyone have any questions? Has anyone else done this so similar to your question? Do you have any ideas that might be helpful for the group if you've done this before that you might want to share?
We've actually started it, and what we did is we started with our administrative, because all the divisions pick up our costs. So we looked at how we were doing things first, and then we did something kind of wild. We had a contest with our employees to see if they had cost-saving ideas, and so we did that, and we had some really awesome ideas, and they're going to be implemented. And so we started that way, and then we started everyone thinking that way, and now we're starting to hit the divisions by starting globally, and then we're doing it just a little bit backwards, but we're doing the funnel.
Sure.
So.
I I'm Bill Prone. I work at Dopkins as well. Just going to give you a couple walkthrough. We did this for several clients, and we've done it where we've done agency-wide. And the reason was the focus was overtime. Everybody's got overtime. Let's talk about overtime. It doesn't make sense to talk to 5 different teams about the same question over and over. But we've also done it for the transportation department, because the transportation department has costs of their own. So why make clinical sit through this conversation? And then separately you have a clinic. So it depends on what it is you're trying to address. So as Matt said at the very beginning, there are no rules. There's no gap that says this is how you do this. It's where's my problem and how do I fix it? So your first question is where's my biggest problem and what do I do? And the example of an agency where we talked about overtime, that was intuition, that cartoon. We think our problem is overtime. And year after year, it's overtime. It's overtime. Okay, well, what are you doing about it? We're not doing anything about it other than we know it's overtime. Okay, well, let's take a look. Show me your general ledger. There was one account called Salaries. Okay, well, where's the overtime? Well, it's in that big number there. Well, how big? Is it 1%? Is it 50%? What is it? I don't know. So step 1, make 2 accounts in the general ledger. Okay, now what are you going to put in the overtime account? You're going to put all overtime dollars or just the incremental rate that you paid for the overtime over the straight time? What do you want to analyze? How do you want to look at it? Okay, this is what I want to see there. Okay, now the journal entry every week has to change to put that stuff. Where does the journal entry come from? It comes from ADP. What does the ADP report say? It doesn't have that number. Go to ADP, have them change it. Okay, so 6 months later, we're now getting real data, and $5 million a year is overtime. Okay, it's a problem. Good. Get everybody together, senior leadership, let's talk about what are we going to do about overtime. And the people in the IRAs say it happens every single morning. Right? Somebody calls in sick, I'm going to incur overtime because I'm going to have the night shift person stay on. Okay, what am I supposed to do? Well, so another person raises their hand, I keep a cheat sheet. I know on my little pad who in my staff doesn't have 40 hours yet. So they're doing this work and wondering why finance isn't doing this for them. I mean, isn't that finance's role to tell me that answer, sort of? I mean, there's that discussion going on. So it comes back to, I want to know every morning at 8 a.m. who on my staff is available to work 8 hours without hitting a 40-hour threshold. Okay, that's not a general ledger question. It's not a payroll question. It's a timesheet question. Okay, so that discussion was, I mean, that was months of discussion to get to the point where, okay, now we've got a plan. We're going to have electronic timesheets. We're going to get our invest in the ADP time clock system, blah, 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 and generate a report that says every morning to every IRA, here's your list of availability, starting with the person with the least amount of hours so far this week, working their way down, and start calling from the top of the list. Okay? Okay, that makes, I mean, it's a little more work for me, maybe, the time it takes me to call the different people as opposed to say, you just stay here, is more effort, but I'm not keeping my cheat sheet anymore, I'm not doing it, blah, 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 blah. And our goal isn't to eliminate overtime. It's to eliminate unexpected overtime. Eliminate unavoidable overtime. So if you can get it from 5 million to 3 million, there's $2 million. Right? $1 million here, $1 million there, pretty soon you're talking real money. So I think that, to me, the key to this whole conversation is there are no rules. Just do it. Start with something and do it. And, like it or not, you're not the decision makers. Because, if for no other reason, the managed care balances the cost against the outcomes. And you're not in charge of the outcomes. So, you can't dictate the costs. Some person out there in operations need to say, it's worth it to me to spend this because of that. That's the decision they have to make. But they can't make that decision unless you're providing the info to do it.
To a certain extent, I agree with that, but really, overtime is more of an HR issue in my mind. The way we did it in my agencies, we have Great Plains, and what I did was I got an ADP report specially made, which actually gives me the hours and the dollars for every type of time that's paid every single payroll. I massage that in a spreadsheet and upload it using Integration Manager. Then I'm able to read it down into a spreadsheet using F9, and then what I do is I compare that to staffing patterns which we have developed with the supervisors and the area coordinators and the director of operations and the director of residential services. And every 2 weeks, I'm comparing that to really it's the total hours that matter. I mean, of course, overtime, we don't want overtime. But a lot of times, you know, at least in New York City, I mean, you have an on-call list of 70 people, you know, nobody shows up. And that's the way it works. I mean, that's just reality. That's really an HR issue. HR has to get these people on, and to a certain extent, it's a salary issue. And you're limited, but the 800-pound gorilla in the room is direct care. Everybody knows it. Once you can control that, you're in good shape. So what I did was I sat with every single supervisor, with the director of operations, and we went through in a staffing pattern. We said, well, what do you need in each slot? Okay, what do you need? What do you need for this particular facility? And we came up with a staffing pattern. So I hold their feet to the fire by taking that staffing pattern and comparing it to actually worked hours, not fringe benefit hours. And I even have something called the wall of shame on it. If you're over 1 FTE, then total FTEs, then you're on the wall of shame. And then you'd be surprised how they really clamor to say, well, it's because we had medicals and we had some things can't be avoided. You know, you have a medical situation, and you know that's one of the things. Another issue would be that also we toyed with the issue of getting a van, one person to drive to really schedule medical appointments for several facilities and bring those around. But it's really a moving target, and you have to. It's, you know, to say this is what you've got. We could say this is your staffing pattern, but you know, stuff happens. You know, life happens. Right. So, but it does help to do the key here. I think is to sit with them and do a staffing pattern on a spreadsheet like we did, and just this is what these are your slots. I don't have anybody here. It's vacant. I know you have to get somebody on call to go in there, and so you put somebody on call there. Or what normally happens is, you know, you have these people in the house that want to make overtime, and they'll do that. So it's, to me, overtime is just, it's going to happen. You know, you got to keep it down. I understand that you don't allow people to do more than 2 shifts, but the thing is, you really have to control the FTEs, the worked FTEs. That's the key issue in my mind, right? And that's the way to do it. You got to sit with them and say, what do you need here? And if all of a sudden there are 4 FTEs over every 2 weeks, then what you got to do is you say, well, do you have what's going on? Oh, we had to put a 1-to-1 on somebody. Okay, fine. How long is it going to be there? 3 months. Okay, don't change the staffing pattern. You can still be on the wall, but just to let you know that we're watching. But it works, you know, and I've been able to cut down FTEs significantly, and that's really the key. That's the way to do it.
Yeah, and I think that goes to the point about it being, you know, having to look at all aspects, not just dollars, but look at units in some cases.
But you have to have the system.
Right.
The system is important.
Correct.
Okay, so what we do for this cost accounting purpose is we have 4 segments to our general ledger codes. The last segment is for, and we also have unit accounts. Great Plains has unit accounts. I know Fundeezy doesn't. But if you have these unit accounts, you post the units, and you're in good shape at that point, because now you just don't calculate the units based on average costs. You have the actual units there. But it's in a 4th segment, and that 4th segment is very, very important. That's how you get cost accounting done in, you have these modules, these job order costing modules, that's the line. That's ridiculous. What you have to do is on the input, you have to have to have these other dimensions, you have to have an extended, different segments in your general ledger. It's more work, and for accounts payable, it's more work too, but you get better data. But that's the trade.
Yeah.
Have I talked too much?
Any other questions? All right, well, thank you all for coming. You may have noticed there's an evaluation form on your seat, if you wouldn't mind filling that out. You have a chance to be entered tonight for a possible prize, and we hope you'll join us at our managed karaoke.
Are you going to sing? Never know, huh?
I don't karaoke. The only managing that I don't karaoke.